Hey guys, welcome back to Your Nifty Guy. I hope all of you are doing well. After a gap of a week, today's video is all about getting back to the charts with a fresh and unbiased view. The market has moved, created confusion, and left traders guessing, which makes planning far more important than prediction. So, in this video, I'll break down the Nifty charts, understand the current structure, and build a clear level-based plan for Monday's market so you know exactly how to react, not just what to expect. If you're serious about trading with structure and discipline, make sure to like the video, subscribe to the channel, and stay till the end because one well-planned trade is always better than 10 emotional ones. Now, this is the first time I have taken a break from posting on the channel ever since I had started because I traveled to Goa with friends as I had mentioned in the last video as well. And I was quite lucky that in despite the entire Indigo fiasco, both our flights did take off uh, flight to Goa as well as the flight back home. Both the flights did take off, although there were slight delays. But then I consider myself extremely lucky. Seeing the kind of chaos at the airports, I consider myself to be extremely lucky, right? In the top percentile of lucky people in India right now, that I this all of us could make for this particular trip. There are people who were coming in from other parts of the country as well, and then everybody would have assembled in Goa and none of the people had actually faced a completely cancelled flight and everybody had reached on time, right? So I consider myself lucky in that respect, but then again, this is the place where luck does not work, right? In the markets, luck does not work at all. You need to be prepared, you need to be having a plan to make it successful in the market. So the entire idea of speaking about the luck part was to come to the markets once again, where uh, even if you are the most lucky person on earth, just relying on your luck will not help you, right? So, on that note, we'll jump straight to the charts. Last video I had posted was around Friday, right? Last Friday, yes, absolutely. This was for Monday's market. So, I'll not be getting into any of those price actions, but then we'll be, in general, trying to understand what had happened. So, we'll delete this, right? So, overall, what we saw was this entire week, the markets at the start of the week came down, created, formed a base, and then have retraced to a little bit of higher levels. Now, this level was already pre-marked on our charts, and if you can see, this is the weekly time frame fib levels, if I'm not wrong, if I still remember what I had drawn. I'm actually opening and logging into my laptop after a week. Yeah, I had last seen the laptop on Friday. So yeah, this is the weekly time frame fib level, and if you can see exactly, market has actually taken a support and bounced off from here. We'll be decoding the structure on multiple time frames, so stay with me. This is on an intraday or a smaller time frame, which is 15 minutes time frame, where we usually make our plans. So markets formed a good enough strong base around here, but then the problem with sideways price action is it traps people on both the sides, right? So anybody who would have tried to trade a breakout of this particular day's high would have been trapped. Anybody trading the breakdown of previous day's low around here would have been trapped. So this was a very good trap setup which had happened around here, right? So this is what I speak about. So this was previous day's low out here. A good bearish candle giving us a closing below, not just yeah, the previous day's low, but then the low of 2 days, right? Try to see and be with me out here. Markets giving us a closing below previous 2 days low. And as soon as the high of this candle gets out, you get a move on the upside, right? So this is what I speak and talk about when I say about talking uh trading the trap setup. So this is what happened on Thursday, and right now we are here. So what we'll do is, so this is the fib level that we had drawn as per the price action on Friday for Monday's plan. We don't need this on the charts anymore, right? So everything else is clean. We'll start with the weekly chart. All right, guys. So see, on the weekly time frame, this was the last major swing, major upswing, and like I had said, we had drawn this particular fib level based on this particular up move, and we can see some extremely good buying, right? So this week again, although the candle on the screens would be appearing red, yes, the closing is below the opening, but then look at this massive tail that has emerged, right? So this is sign of the buyers actually stepping in. And I would like to look at this candle as a positive candle and not a negative candle, right? So on a weekly time frame, our structure is still higher high, higher lows, right? And we have taken extremely good support from the weekly fib level. That is a good thing. Now, if we look at the daily time frame, needless to say, of course, we have come down and we have taken support from the fib levels. And but out here on the daily time frame, if we look at it, our structure is still lower highs and lower lows, right? So the thing to observe in the upcoming sessions is whether what we are doing is we are straight away going breaking this high, most unlikely, but or we are giving us some retracements, forming a higher low first and then changing the structure going up, or we are continuing down. Okay, this was the first bounce which had come in. These are weekly levels. The first bounce had come in, but then are we actually continuing the journey or we are again going down based on the daily time frame charts or levels? That is something that we will be seeing in the upcoming days. So this is the, like I said, on the weekly time frame, the structure is still bullish. On the daily time frame, the structure has still not changed. It is still uh, lower highs and lower lows. Now, on the 4-hour time frame as well, the structure is still lower high and lower low, right? But then we'll use the fib levels again out here to check out how much have we retraced, right? Because we have come back up and we have actually given closings above the zero point 0.5 to 0.618 zone. That is a good good thing. So whether we are continuing up again, we have to pay a lot of attention on the structure which is forming in the upcoming days. Whether we are going out here, making another higher low, and then moving up in creating a higher high is something that we need to look at. But then again, on a 4 hour time frame, again, I don't need to mark those levels because we have already got a closing above it. On the 75 minutes time frame is what I feel the chart is looking the most beautiful, wherein markets came here, created a good double bottom, right? Markets came here because bounce, came back again, created a lower low, but then have bounced. And with this lower low, there was a good RSI divergence as well on the charts. So, of course, this was the neckline which has been breached, and right now we are trading out here. So, what we need out here is again a higher low, right? Had this low not gone below this particular low, right? Then we would have already had a higher low in place and a higher high had been already been formed. But then again, the structure is not entirely changed, right? We've got a good double bottom, but then a higher low is still pending. And this is where we'll be using the fib levels for our upcoming sessions. All right. And we'll be marking the zero point 0.5 to 0.618 zone. Delete this. And we'll write 75 minutes fib. Okay. Now we'll come down to the lower levels and we'll create the trade plan for Monday. So this is the most simple trade plan. If we open flattish, we break out with a pullback. we can continue the momentum. We can also expect a trap setup in case if that works just like it worked on that day. We need a good bullish green candle closing above Friday's high, and then if the low of that candle gets taken out, we can create or take a short trade. Is there a trend line that we can use? Yes. See, this right here, or a trade on the short side would be a little bit of a confusing trade, apart from the trap setup which is there. But then again, if we see markets actually break down below this particular trend line, considering that on the daily time frame we are still uh, in a bearish territory, and we are also trading much below this particular trend line which had come in, right? So we broke down below it and we are still trading below it. So out here, this entire area of sideways consolidation which happened on Friday, if we break the low of this particular area along with this trend line break and we get a pullback, we can create a short trade. Don't get confused. I'm just slightly moving this out here just to simply avoid the confusion, right? And of course, out here, if we get some buying, this is where we can plan to create a long entry as well. So this will be the Uh, absolute simple trade plan for Monday. For Monday, I'll be keeping my trading light, right? There has been a break, a disconnect with the charts because of the entire week of inactivity and not actively looking at what the market is doing. So, yes, of course, we have the plan ready, and then if anything happens and goes as per the plan, we'll stick to it. Of course, I'll keep the quantities lower. That is what I meant by keeping it lighter. And I plan to proceed ahead with caution just because of the break. So in case if you are regular and you are continuing that, you can trade as per your regular plan. So yeah, that's the plan going into Monday. Remember, the goal is not to predict the market. The goal is to be prepared for it. Carry your levels, respect your risk, and let price do the talking. If this video helped you bring clarity to your trading, do not forget to like the video, subscribe to the channel, and share it with someone who needs structure over noise. I'll see you in the next one. Until then, trade disciplined, stay patient, and trust the process. This is your Nifty Guy signing off. Cheers and thanks for tuning in, guys.